Welcome back, folks. You're watching Bazaar Morning Call. Hope you're having a good morning so far. The bulls are definitely not going to have the best morning, given the GIFT Nifty implied opening suggests an 80-point cut, but lots of stocks to focus on. Mangalam is here first up to tell us why you should be looking at ITC this morning. Mangalam, over to you.
Well, the bulls may be happy with ITC this time around because the results showed strong internals. What's good? The cigarette revenue grew about 13%, and that was led by volume growth of anywhere between 9 to 10%, much higher than street anticipation of 7 to 8% itself. The FMCG vertical, that's the growth driver of the company. The quarterly sales run rate has crossed the 5,000 crore mark for the first time with margin expansion. That's good. That means the overall margins have come in at around 39.5%, which is above street expectations. And we've seen the net profit also beat street expectations. In terms of the other segments, yes, the hotel business grew just about 8%, slightly lower than expectations, but this came on a high base with expanded margins. Paper revenue declined by about 6.5%. That was expected. And agri-business also saw a revenue decline of 24%. This was largely on account of export bans in the wheat business. If you adjust for that, the agri revenues have actually grown by 31%. Over and above all of this, the companies also announced the swap ratio for the hotel business demerger. Shareholders will get one hotel share for every 10 shares of ITC, and this lists about 15 months from now. The stock has recently corrected about 10% from its record highs, so see some bounce back.
Okay, all right. Thanks a lot for that. Mangalam, well, Infosys is the other one that could give some kind of support. Rima joins us to tell us more. Rima?
Thanks so much for that. So Infosys has won a mega deal. It's worth 1.5 billion euros over the next 5 years from a EU-based telecom company, the Liberty Group. The contract is initially for 5 years and valued at 1.5 billion euros, but can be extended to 8 years with an estimated value of $2.3 billion. If you remember, Infosys had shocked the street after cutting the guidance in in Q1 of FY24. They were only guiding for a 1 to 3.5% growth. So this deal will provide some more confidence. And given the fact that now off late we've seen many large deals, whether it's HCL Tech last week and now Infosys, I think the confidence in IT is going to go up. The only question is how much of it is going to be net new, because Liberty Group is an existing client of the deal. And there's another question mark on the kind of margins Infosys will enjoy on this deal. But no taking away from the fact that the company has won a very large deal. Back to you.
Okay, all right, Rima, thanks a lot for that. So that's Infosys going with green over there. But IndiGo, I'm choosing red for that stock, at least at the starters, as the Gangwal family has launched a mega block deal in Interglobe Aviation. Now, this will be the third tranche of selling from the Gangwal family in Interglobe Aviation. And this, of course, is source-based information at the moment. The Gangwal family will be selling an additional 4% stake in Interglobe Aviation via a block deal today. The indicative price stands at about 2,400 rupees, which is almost a 6% discount to the current market price. And they're looking to raise about 3,730 crores via this stake sale. Now, currently the stake that they hold is a little under 30%. After this block deal, they'll be left with another 25.7% stake, which is around, which is valued at almost 26,000 odd crores. Now, remember, today the stock may be in the red because of this overhang. But if you look at the trajectory, the stock has had a brilliant run in the last 6 months or so. It's up 35%. It reported exceptionally strong numbers in the quarter gone by. There were record high profits and EBITDA. And there are a lot of things working in favor of IndiGo, as we know, whether it's strong domestic traffic, lower fuel and favorable yields that aided earnings. So a lot of bulls on the street as well. Citi has raised their target price to 3,400 on the stock, while Macquarie has outperformed with a target price of 29.50.
Okay, all right. Thanks a lot for that, Sonia. Well, Surbhi joining us to give us an update on Zee Entertainment. Surbhi?
Thanks so much for that. So, SEBI has issued a confirmatory order in the Zee Entertainment case. They said that they bar Puneet Goenka and Subhash Chandra from holding any key managerial positions in Zee Entertainment and other 3 group companies, which is Zee Media, Zee Studio and Zee Akash News. They also said that they will be barred to hold any KMP positions from any other company that has been created post the merger as well. They expect the probe to be completed in the next 8 months. So, for now, going with red on Zee.
Okay, thanks very much for that. Well, Rima is joining in now on Vodafone Idea. Rima?
Well, it's a weak set of numbers. There is a top-line growth of 1.2%, but margins have contracted. The losses are mounting. In the quarter gone by, the company had a loss of more than 7,800 crore rupees. The debt has gone up, the company's subscriber base has also shrunk, and their capex is the lowest on record this time. But you know what's also concerning is the company has said that they have a payment of 1,680 crore, which is due on 17th of August. They're unable to make that payment on time. There is a 30-day grace period which has been offered for any spectrum payment. It's a part of the notice invite applications. So the company is availing of that 30-day grace period to make that annual spectrum payment of 1,680 crore. They go on to say that in the event of the company unable to meet this obligation, then one of the promoters has committed to bring in 2,000 crore rupees. So that's a bit of a positive, but numbers are weak. Back to you.
Okay, the numbers are weak. Thanks for that. Well, the Mahindra Group has outlined its strategy for electric vehicles and farm sectors in a huge event that they had in Cape Town over the weekend. In fact, over the last 2 days. Parikshit Luthra is here with more details and all of that. Parikshit, over to you.
Here in Cape Town, the Mahindra Group has outlined its future strategy for electric vehicles and the farm equipment sector. Starting with electric vehicles. Now, this is a time when electric car sales are picking up and they could cross the 1 lakh mark. Mahindra has only one electric SUV in the market right now. Next year will be the E8, which will hit the markets in December 2024. What they have done, they have unveiled a new brand identity for electric vehicles, an infinity loop logo, which will be carried by all future electric vehicles, including Born Electric and ICE vehicles, which are converted into electric in future. This is to differentiate the EV portfolio from the ICE portfolio, which will continue to carry the Twin Peaks logo. They've also showcased a production-ready BE05 electric SUV to show that they are ready with an electric SUV for the market. Behind me is an electric Thar, a 5-door electric Thar, which could come to markets after 2027. This is also an indicator of the 5-door ICE version of the Thar, which will hit the markets next fiscal. The company has also showcased the Oja range of tractors. Now, these are ICE tractors exclusively in the farm segment, and this will be important for the Mahindra Group because these are lightweight tractors that have been launched to target farmers in the horticulture sector, orchard farming, those with smaller land parcels, not just in India but in ASEAN and US. And the company believes that this will be important for driving their market share, driving the next phase of growth in the tractor segment.
Oh, absolutely. Thanks a lot, Parikshit, for that. So Mahindra is aiming to double their export target over the next couple of years. And in the tractor space as well, this 20 to 40 HP lightweight tractors, they're looking to increase market share there. So the stock could be in the green this morning. But let's go across to Sonal. She's talking about the windfall tax hike and the impact that it could have. Sonal, over to you.
Thank you for that. Well, it is a big hike that has come by because of the way crude prices have moved in the last couple of days. Windfall tax on crude petroleum production, that has been hiked to 7,100 rupees per ton, which compares with 4,250 rupees per ton. And if you look at the trajectory as well, in last couple of changes that have come by, it has been increased from 0, that was what we saw in June, to 7,100 rupees per ton right now. Windfall taxes on diesel, that has been hiked to 5.5 rupees per litre versus 1 rupees per litre. This is the export duty basically. And this is negative for the likes of Reliance Industries. On petrol, it continues to be nil, but on ATF, it has been increased to 2 rupees per litre versus nil earlier. So ONGC, Reliance Industries, the companies from the oil and gas space will be in focus on the back of this.
Okay, all right. Thanks a lot for that, Sonal. Well, let's hop across to Vivek. He's joining us to tell us about GMR Airports numbers. Hi, Vivek.
Well, good morning. It's an operationally strong quarter from the company this time around. Most of the operating metrics have improved both sequentially as well as on a year-on-year basis. Along with that, the board has also gone ahead and approved a fundraising proposal to raise up to 5,000 crores. This could be done via the FCCB route or the QIP route. Looking at the numbers themselves on a year-on-year basis, revenue is higher by 40%. EBITDA, core EBITDA is up 77.5%. Margins to expanding over 700 basis points on the back of higher operating expenses as well as a higher tax rate. This time around, the net loss has come in at close to 30 crore. But last time around, the losses were over 130 crore. Key highlights, in the quarter gone by, the aero revenue is up almost 17%. Non-aero revenue this time around is up 34%. Company sales that the passenger traffic after a while has gone ahead and surpassed pre-COVID levels, and this time it's higher than what it was in the first quarter of FY20. Along with that, the management commentary too is quite positive. They're saying the traffic will gain further momentum with the additions of routes as well as airline capacity that the company is targeting.
All right, thanks very much, Vivek, for that. Now, the next one is certainly a stock which perhaps goes in the red bucket, VIP Industries, where the managing director has quit. Mangalam has got more. Mangalam.
Well, yeah, VIP's MD, Anindya Datta, has packed his bag with immediate effect due to personal reasons. And this is interesting because he had joined just a little over 2 years ago from Lotte India. He was earlier the MD of Have More India itself. What's more interesting is that his predecessor, Sudeep Ghosh, had too resigned in 3 years of being at the helm itself. That makes the new appointee, which is Neetu Kashiramka, who is ex-Jyoti Labs, as the MD designate, the third MD designate in the last 5 years itself. And what's interesting about Neetu Kashiramka's appointment is also that she too joined the company in May 2023 itself, just a couple of months ago, as the CFO. In family-owned companies, such churn at the top usually is viewed as a negative sign from a shareholder standpoint, which is why maybe, as against its peers, VIP has been an underperformer. In fact, this year itself, the stock is down 4% as against Safari, which is up over 100% itself. See some more red on the stock.
Okay, thanks a lot for that. Well, let's watch out for all of these stocks. But NMDC is the other one, reported a good set of Q1 numbers. The results were driven by higher realizations, lower other expenses and royalty-aided margins. Nigel, in fact, caught up with Amitav Mukherjee, who's the chairman and managing director of NMDC, began by asking him about the quarter gone by and quizzed him on the outlook. Also asked about the outlook for NMDC Steel. So listen into that conversation.
We are looking at more than 45 this year. Comfortably, we should be, I think we should be able to achieve around 47 to 49. That is the number we are looking at, especially in terms of Kumar Swamy that is coming in. And we had an upgradation at Bacheli that is almost in commissioning stage. So I believe that these two will take us to somewhere between 47 to 49.
How does NMDC's pricing in quarter two so far, compare with an average of quarter one? And how do you expect prices to move from here? Is there any downside risk, or do you believe now they're bottomed out?
You see, the prices, of course, there's a lot of pricing pressure right now. Even if you see the quarter one averages, they are at least down 30% as compared to last year. And going forward also, even as we enter Q2, we have had to take a couple of reduction in prices. So obviously there's a major pricing pressure. Of course, as of now, I don't see any light at the end of the tunnel. The pressures continue. And of course, the good thing is that the offtake has been rather robust despite the prices not taking. And I think so far as the volumes hopefully will take care of the downside in prices.
Okay, all right. What about margins, sir? For the company you're doing at the upper end of the 30% odd mark, do you expect to continue in these sort of margin trajectory, given that you're saying that prices are under pressure, but you'll get the benefit of operating leverage? So how does it pan out?
Yeah, I think our EBITDA margins would be around 40%, give or take, plus up to 1 or 2%. The same almost, I think in Q1 we did around 41%, 40%. So I think with these prices and with our operating costs coming down, with the volumes going up, our operating cost would be a little coming down a little bit. So with those things, I think we should be able to maintain an EBITDA of around 40% plus minus 1 or 2%.
All right, Mr. Mukherjee, first of all, congratulations as well on commissioning the NMDC steel plant. I think for many, many quarters, actually, we've been talking about this. I could also extend that to a couple of years as well. We've been talking about this. But now you're finally lit up the furnace. And I believe that commercial production is almost underway now. So give us a couple of numbers with regard to NMDC steel. What kind of sales volumes can you do from NMDC steel for the coming year? If you could give us some kind of a number out there. And also, at what level of sales does it break even?
I think the good news, as you know, that we have lit up the blast furnace. Yeah. And about within a week's time, we should be able to roll out the coil from our own hot metal. So that's been there for, this is the day we've been working for the last couple of years. There have been certain slippages, but now I think we are almost there. The blast furnace is behaving the way it should have been, touch wood. And we have, in fact, the flare has also been lighted last night. And tonight we expect the slag to come out, and in 3-4 days for the hot metal, proper hot metal, which we can make into steel and then roll it into coils. The good thing is about the NSL is it's a very, very modern plant, and the output is supposed to be one of the best qualities in the country. And it's going to consume a lot less energy than the traditional steel plants do because we have a continuous caster. So that's going to be a major upside for the steel plant. First year, I think in the first half, we are targeting at least 1 million ton of steel. We have a constraint in in the lime dolo plant not being available, and we are making steel with purchased lime. So that's a major logistical challenge. It's a major logistics challenge. Despite that, in the first half, in the second H2, we would hope that we'll reach the 1 million mark.
Right.
By the time we get our lime roller plant in stream and do 2 million ton, we should be able to break even because the products that we'll be selling is essentially premium products.
Okay, got it.
They will fetch a premium of not less than 6,000 to 7,000 in the market.
Okay. All right. Got that. But Mr. Mukherjee, at what level does it break even? 1.5, 2 million tons?
It will break even around 2 million.
Around 2 million tons. Got that.
That's the back of the envelope calculation.
Got it. All right. So 1 million tons is what you're looking at. At 2 million tons, you'll break even. Mr. Mukherjee, NMDC, there were talks that NMDC has to buy 10% stake in NMDC Steel. Is that still happening? Because your shareholders will want to know whether or not you're going to be spending this money. At current reckoning, it will be close to around 1,300 to 1,400 crores.
Yes, there has been talks, but there has been no formal communication as such.
Okay.
But there has been talks, but I think it's too early in the day because the government needs to decide. But yes, there have been informal talks that in Chhattisgarh, some amount of presence is required for NMDC as steel plant. So I think anything around 10% might be offered to NMDC. And if it is offered, then we'll have to look at what prices it is offered and what terms it is offered. So we'll take a call at that point of time.
Okay. All right. Tell us, what is the debt in NMDC Steel's books as of now?
As of now, it's 5,000 crores. It's almost 5,000 crores.
Okay.
That's the debt as of date.
And have the bids come to buy out the unit? Because there has been an offer that's been put up, but have the bids come in?
I am told that there's been a fair bit of interest and multiple bids have come in on the EOI. And I understand that the share purchase agreement is right now being finalized. And once it is finalized, then the process of disinvestment would go ahead. As of now, of course, everybody was waiting for commissioning of the steel plant. And now the steel plant has almost been commissioned, or it will be commissioned in the next 3 or 4 days.
Okay.
I think then then that would gather pace.
By when does it get closed out? By when does this NMDC steel plant get sold?
I cannot give you a visibility on that because we are not running that procedure. And that process is being run by Deepam. So
right.
All I know, once the plant gets commissioned, then the further process would pick up speed and it should reach to a logical conclusion in a fair amount.
This calendar year, you think so?
I can't speculate on that. It will be difficult to speculate on that.
All right.